Hi there, and thanks for tuning in to Targets in Focus on the first day of this trading week. I have Sebastien Galy from Societe Generale in New York on the line to share his views on the dollar yen, dollar CAD, cable and euro pound. So let's begin with the dollar yen. The dollar fell against its Japanese rival. It was actually hurt by a dip in US bond yields after disappointing housing data on Friday. Now, this has actually raised uncertainty about an early withdrawal of stimulus by the Fed. So, Sebastien, can you tell me more about this? And how do you expect the dollar yen to be trading after the release of the US data this week?
What we've seen is essentially the market is still positioning long dollar yen. And of course, if we get some negative data, it kind of hits the dollar yen quite significantly. However, what was quite interesting and very, I must say, somewhat surprising is the rather limited reaction of dollar yen to its fairly negative news on U.S. durables, and it's not the first negative surprise we've had in the U.S. Now, we do know that overall G10 positioning is relatively light, but the biggest position within it is definitely a long dollar yen position, and it is resisting a lot better than you would expect. Now, 99 is roughly the fair value of dollar yen, so we're actually under Abenomics, so we're actually fairly close to it around right now, about 70 pips below. We should be retracing much lower on the back of that one, but we're simply not seeing that. So it's a somewhat interesting and fascinating aspect to it that we should be moving lower, even though the market will perceive this weaker data as being positive to some extent for equities because it reduces the risk of tapering. It should, since dollar yen trades mainly as a function of the U.S. Treasury yields, push it a bit lower. So it may be that right now we're in simply very liquid markets, but I would expect dollar yen to suffer a little bit more. Nonetheless, over the next few weeks, we should, see some form of normalization of risk. Probably we'll see somewhat higher yields, and the combination of that should be to help dollar yen break above the 99 level and slowly but steadily drift in the direction of 100. So it's not as appetizing as it was. People will be reluctant to put on a lot of long dollar yen positions, but over the long term, the yen will prove a good funding currency, increasingly so. And I think that's probably one of the slow drifts we'll go and see, I guess, in the next few weeks. We have a very bullish forecast on dollar yen. We do expect it to reach, I believe, the 105 level by year end, if not a little bit higher, and that will be a function of tapering fears fading, yen working as a funding currency, helped to some extent by some of the Abenomics, but mostly a function of global risk and the fears of tapering slowly receding. Yeah, 99 would be the next few days, and by year end 105 levels or a little bit above. Yeah.
And moving on to the dollar CAD, the US dollar climbed to 6-week highs against its Canadian counterpart on Friday after tepid Canadian consumer price inflation data. So can you tell us more about the trading patterns we are seeing?
Sure. I mean, right now we're trading pretty much at our forecast for September on dollar CAD, so we'll be very happy if it stays there. But I wouldn't be surprised if it actually fades lower. So we're close to tapering completely the taper fears. That means the CAD has suffered significantly. The dollar has appreciated a lot, and also, as you mentioned, Canadian data has been weaker, and surprisingly so, in line with what we just saw today with U.S. durable goods orders. So a bit of a surprise. In terms of the way people trade it, it's trade basically is a range between 102, 104, 104, 106. We reached the top of the range, and now we're receding below that. The odds are we stay within the 106, 104 level for a bit, and then we will break lower. Why? Because a lot of the fears related to tapering in the U.S. business cycle will fade, and even though the market is generally long the Canadian dollar as a whole, not in terms of speculative positions, because they're actually short. I think these fears will eventually fade, and that should mean that dollar CAD drifts back below the 104. Down to 102 levels. It's probably going to be one of the outperformers eventually, and that'll be very correlated with what happens to the Mexican peso, which also would probably at that point appreciate significantly.
And looking at the cable, Sebastien, how is this pair trading ahead of Mark Carney's speech this week?
Well, there have been significant leaks concerning the UK, whereby people expect the Bank of England to reaffirm its stance on forward guidance. The problem for the Bank of England is that even though they've pushed on the forward guidance, they've actually not achieved what they wanted, which is basically to flatten the front end of the gilt curve much lower. What's happened is, as part of this broader risk management exercise where people have reduced durations. They've hit basically all the curves globally. That has also hit the gilt curve, and it means it's a bit steeper than it should be. And that unfortunately is working against Mr. Carney, particularly so because the UK data has been better recently. So the market generally does not necessarily believe if the data is better that the forward guidance means much, and particularly so when it is risk managing its positions. So eventually, probably will force the Bank of England to do what it needs to do, basically to somehow reaffirm guidance with something a bit more serious, and that should maybe calm down some of the pressure that we've seen in the front of the gilt curve, which has supported sterling versus euro. But if you look in terms of the actual price movements, you'll see that a lot of the bullishness in sterling versus euro has, to some extent, already receded. We may see that recede a little bit more in the coming days with Mr. Carney and take a hit on sterling. I think people will then wait out for that event to buy back into sterling, particularly against the Swiss franc. So I guess the sterling versus Swissy is one where people will wait to buy on the dip following that correction, thanks to what Mr. Carney will need to do to reaffirm his forward guidance.
Thank you very much for that, Sebastian. As always, we love having you on the show. Well, that is it for right now, but do tune back in tomorrow. See you then.